Hello everyone, good afternoon and a very warm welcome to today's webinar. My name's Jackie and today we're going to be looking at some of the Brexit tax codes in your software. Just before we begin though, as normal, we'll just go through some housekeeping first of all. So you will notice that you are placed on mute. That just means that you can't speak to the team directly, but it doesn't mean that you can't send your questions across. So if you do have questions on today's session, then please do use the icon. It looks like a speech bubble with the question mark in the middle, and that will open up the questions panel for you so you can submit your questions across to the team. Today we've got Michael and Tina on hand for any of your questions that you may have. We also have a handout for today's session. So the handout, the icon looks like a document with a folded corner. So if you use that one, it will allow you to download a copy of today's slides as well. Okay, so this is what we're going to be covering today in terms of the Brexit tax codes. So we're going to do a very, very brief Brexit overview in terms of some of the terminology that we're going to use. We're certainly not going to go through the ins and outs of Brexit today for you, because I think that one has been done to death. So we're going to be talking about postponed accounting briefly, and then we're going to look at those tax codes. And then we're going to look at the tax code finder article, because this is particularly useful. If you don't have us on hand, it's going to help you decide which tax code you can use in some circumstances. And we're very, very briefly going to touch on import duty and import VAT and where to find out more information on how to post that in your software as well. Okay, so first of all, we'll just briefly talk about postponed accounting and Brexit. So Brexit, obviously, it came in almost 2 years ago now, but lots of people are still getting to grips with it. There has been a lot of change there. What we've got is we've got some terminology that I want to just highlight first of all. Now, we're not going to go through the ins and outs of this, unfortunately, and we don't have enough time to go through all the ins and outs of postponed accounting, but I just want to try and give you a brief explanation so that we can explain this for you. Now, just before I go any further, it's probably a good point for me to point out to you that these codes are all UK only codes. So if you are joining us from Republic of Ireland, you will realise that you don't actually have any of these codes yourself. Your codes are very different from the UK. So I do just want to give you that heads up. You're more than welcome to join us, but most of what we're covering today is UK only. Okay, so postponed accounting. This came in on the 1st of January 2021. And what it does is it applies something called reverse charge. So we're applying a notional VAT onto your VAT return. Now, this is something that has been used elsewhere. So it was used in the past for the sale of microchips and computer chips, and it has also been used in domestic reverse charge. And what this means is rather than paying VAT up front and then waiting a significant amount of time to reclaim it, it does mean that you can actually process it all on the same return. So you're essentially paying and reclaiming on the same return. Now, the reason that this was introduced was really to try and help those businesses with their cash flow. So rather than paying out front, like I said, and having to wait a period of time, it's all done on one return. So we're reporting to HMRC, but actually there's no loss of cash through using postponed accounting. Now, if you do want more information on postponed accounting, because there is a lot more to it, there are certain criteria you need to meet, etc., then please do use the link on the screen just to get a little bit more information around postponed accounting there. If you have any further questions, it would be something that you'd be best to speak to either HMRC directly or to speak to your accountant on so that they can discuss that further relative to your business and your position as well. Now, it does sound really complicated. It sounds like really tricky to get this on your VAT return, but we have provided a tax code that takes care of all of that. So don't worry when you hear the term reverse charge. We've put in the tax code to make this as easy as possible for you. All you need to know is, should I be using postponed accounting for my transactions? Now, in addition to postponed accounting, there is another scheme which works very similarly in terms of the VAT return. And this is the £135 consignment rule. And this is for very small imports into the UK that are less than £135 for the entire consignment. Now, again, there's lots more information as to what's included in a consignment and more details on that same link that's on the screen there for you. But if you are importing from business to business, and it's less than £135, then it may be that you can process under the £135 consignment rule. And again, what this does is it allows you to pay and recover the input tax on the same VAT return. So again, should be able to help you with your cash flow on those types of transactions. So a very brief bit of terminology there, just so what I'm going to go through over the next couple of slides does kind of make a little bit more sense for you. Also might give you more information that you need to go and seek from your accountant or from HMRC. So what we're going to do next is we're going to look at the Brexit tax codes. Now, just before I do actually show you the Brexit tax codes, I want to show you where you can check this in your software. So if you're in your software now and you're thinking, I want to just check if mine are aligned with the defaults, then I'm just going to show you where you can do this. I'm just going to pop into my software for 1 second and share the screen again. Okay, so we're in my software. So if you're in your software and you want to check as we go through these, the best place to do this is within settings and into configuration. And within here, we have the tax codes tab. And this is where all of your tax codes sit. Now, the majority of you will probably be using default tax codes. However, if you have previously used the tax codes we're going to go through, and you've then come to use Brexit tax codes, you might find it's just found the next group available. So mine start at T14 down to T19, but you might find that yours are further down if you've previously used those tax codes. So today we are going to refer to them using the terminology of T14 to T19, but just bear in mind yours might be slightly different if you've used those codes in the past. But you can see quite clearly the description is there, and that's added as a default once you use version 27.1 or above. So none of this is anything that I've needed to enter manually at all. So if you can't find them, have a scroll through and see if you can see these terms elsewhere in your list. And as you can see, there's quite a few different ones in there that are default ones that you might never have used before, and that's completely fine because you don't have to use every single tax code, but that's where you can find out what's set up in your software. So that was in settings, configuration, and then in your tax codes tab. Okay, so I'm just going to pop back to the PowerPoint for a moment. Bear with me. Get onto the right slide for you. Okay, so we're just going to go through those tax codes now. So as a result of Brexit, we've actually introduced 6 new tax codes. Now again, don't be alarmed. You won't necessarily need to use all of them. You might be in a position where you don't need to use any of them. But there are 6 of them here for different sets of circumstances. Now the majority of them, T15 to T19, were all introduced in version 27.1, which was released in December 2020, so a while back. And that was released just in preparation for Brexit. Later on, we realised that we actually needed an additional code based on feedback from customers, and we did then also implement T14, which is available from 27.2 or above. Okay, so if you want to be using these Brexit tax codes that take care of everything for you, make sure you're on the most up-to-date version of your software. Now, the next key thing for me to point out is that these Brexit tax codes, if you look at the description, are actually all to do with purchasing or importing. So these are actually transactions that you would just be using on your supplier invoices. You wouldn't need to be using these on any of your sales transactions. So we will come on to that a little bit later on, because it's not to say they haven't changed, but there are no new tax codes for sales under Brexit. So the first one there is a T14, and this is the import of goods from the rest of the world, so anywhere outside the UK, and no VAT is charged. So in this case, we need to just impact box 7. So if we wanted to do that, we can use the T14 tax code in order to achieve that on our VAT return. The next 2 are purchase of services, and this depends on whether or not there's VAT applied or not. So T15 is if there's VAT applied and we need to reflect reverse charge, as you can see in the other highlights, there's notional VAT involved here, then we can use a T15. And this T15 will impact boxes 1 and 4 with the VAT value, so they effectively cancel each other out, and boxes 6 and 7 with the net value, again, so they effectively cancelling each other out here. So really the overall impact of processing an item on a T15 to the VAT return is that it doesn't have any net impact on the return. However, for reporting purposes, it is reflected correctly on the VAT return. So if you do find you're in that position and you need to use notional VAT for reverse charge, then the T15 is there for you for your services. Now, if there's no VAT applied, we've got a T16 tax code. And as you can see there, that's only impacting box 7 on the return. Now, if you're using standard VAT, this can actually be achieved by using one of the normal tax codes, a T0. So you don't actually have to use the special T16 tax code unless you are using VAT cash accounting. So you might find that that's the only one you would ever use, and actually you're on standard VAT, so you can use the T0 instead. So the next two are where we get to the interesting ones. These are the new ones, as what we'll say. And this is the £135 scheme and also the postponed VAT scheme. Now, just looking at them immediately, you can see they have a similar impact on the VAT return. So the VAT value will hit box 1 and 4, and then our net value will be in box 7. So you may be asking, well, why don't we just use the same tax code? Now, they are slightly different because postponed VAT, which we will demonstrate in just a moment, has an additional step that it will do. So this T18 not only puts on the correct impact onto your VAT return, but it also posts a VAT only credit note to correct your supplier balance. So if you're using the £135 scheme, make sure that you do use the T17 rather than the T18, because you're going to end up with some credit notes that aren't quite correct for you. So if you're under that threshold of £135 and you're meeting all of the criteria, then you can use the T17, and again it will do that notional VAT for you on boxes 1 and 4. Postponed VAT, so if you have decided you're going to be using postponed VAT on your transactions, then the T18 tax code is going to again do the same impact on the VAT return on boxes 1 and 4 with the net element in box 7, but it posts the VAT only credit note, which we'll show you in just a moment, just to correct that supplier balance. And then finally, import of goods, VAT not postponed. So if for whatever reason you've decided you're not going to use postponed VAT, then you can use the T19 if you're on VAT cash accounting. But if you do just want to continue processing on standard, you can use the T1 instead. So you don't have to use the special Brexit tax code if you're on standard VAT and the VAT isn't postponed. Okay, so that's the 6 tax codes. Now I'm not going to demonstrate all of them because most of them are just like a normal tax code. They do have funny impacts on your VAT return, but processing them is just like processing your T1 or your T0 transactions. What I am going to demonstrate is that of the T18. So just skip that slide there because we showed you that live earlier on. So I just wanted to give you a bit more information about what this T18 tax code is going to do, because I think this is what causes a lot of confusion. Because like I say, this transaction appears from nowhere. So what it will do is it posts the VAT only credit note automatically. It's automatically created. You don't need to create it. And that reduces the outstanding value and corrects the supplier account for you. And it is automatically allocated to the invoice, so you don't need to do any allocations yourself. It will do the correct impact on the VAT return in boxes 1 and 4 of your VAT return. And that credit note, because it's a VAT only credit note, shouldn't impact your VAT return at all. So I'm just going to quickly show you how to do this and show you some of the messaging that you're going to get along the way, just so that if you are posting postponed accounting, you're prepared and you know what these messages are meaning for you. So bear with me 1 second. We're just going to pop back into our demo data and pop onto our suppliers. Just reshare the screen there for you. Okay, so I've got my customer in Spain. It's where I would like to be right now for all this cold weather that we've had recently. And what I'm going to do is I'm going to process a simple batch invoice for my customer in Spain. So the same as most other invoices. So pop in my date, my nominal code, and I'm just going to pop the value in here. So you can see I've just popped in, I'm going to pop in 1,000. And at this point, VAT is calculated on a T1 basis. So if I pop into tax codes and find my postponed VAT one, and immediately I get this message here. Okay, and what it's telling me here is that I'm using postponed accounting. So it's hard to get this wrong because it's going to prompt me a few times before I actually save that I'm using postponed accounting. But it's also indicating what's going to happen. So it's telling me now it's automatically going to post this credit note for me on my behalf. Now you can close this message down. We're getting more and more don't show tick boxes within the software, but for the time being, I'll leave that unticked. So I'm just going to say OK to that. And as you can see, it's automatically applied 20% VAT on top there for us. So I'm going to save. There's nothing in here at all at the moment to indicate any credit notes. I'm just going to click on save. And again, it's just prompting me there again to say that there's going to be a credit note posted. So it does prompt me twice before I actually get the transaction saved. So like I say, it's hard to go past that without actually being prompted about the credit note being posted. Okay, so if we pop back into our customer, sorry, I've put in customer, it's confused me myself. It's not a Spanish customer, it's a Spanish supplier. I do apologise. If we have a quick look at their balance, although that invoice was for £1,000 and then the VAT was added on top, what you'll notice there first of all is that the balance is now just £1,000. So if we pop into our transactions, and I handily didn't process anything else, so there was nothing else to see in the software here. What you can see there is my original invoice that I posted for the 1,000 plus 200 on the T18. What you can also see there is the purchase credit, and it quite clearly indicated that it's for postponed VAT, and there's no net, and it is for £200 on there. If I pop back into the supplier, pop back into their account and into their activity, you'll also be able to see it on there. So you can see now that it is allocated automatically to the invoice. So now it's only the £1,000 that is now outstanding as a result of postponed VAT. If we run a quick VAT return for, I'm just going to do for 1 month just to make this nice and quick. What you'll see there is, as we mentioned earlier, we've got the £1,000, which is the total of the invoice here, and that £200 is being paid and reclaimed on the same return. So it's having no net impact, as you can see in box 5, but you can see a figure in both box 1 and box 4. So they're effectively cancelling each other out. So it's all taken care of. All I need to know is which tax code to use, and all of the hard work in the background is taken care for me. So I'm just going to come out of it there for you. Okay, so I'm just going to pop back to the PowerPoint. And we have got some screenshots in the PowerPoint for you. So if you do want to have a go, take some notes, there's all the slides are there for you. You can give this a go as well in your demonstration data. So if you want to test something out, just make sure that you set up a supplier from a different country outside the UK, and you'll be able to run a quick test and see for yourself what that looks like. Okay, so I'm just going to move on to sales. Now, I mentioned earlier that sales haven't got their own tax codes as a result of Brexit. They use some of the tax codes that were there originally, but it's not to say that you won't be using a different tax code as a result of Brexit. Okay, so you may still need to revisit those transactions and make sure that you're using the right tax code. So I'm just going to again share my screen. And what I've done here is I've just shared some of the article links that we've got that show you some of the changes as a result of Brexit. So as you can see here, again, it differs depending on whether you're selling goods or services. It can also depend on whether or not you've received a VAT registration number or if you haven't. So there are lots of questions you need to be asking if it's your first transaction post-Brexit to make sure you've got all of the information to make that right decision there. So just really briefly, just to explain here, as you can see, before Brexit, you would normally be using T0, T1 or T2 on transactions that are a sale of goods. And afterwards, we're looking at the same tax codes, but they might have changed up a little bit as to the scenarios when you would apply those. As you can see, also in the lower section there, where we used to use T4, we're no longer using T4 in the mainland UK, but it will still be used when you're in Northern Ireland. So just bear in mind again, if you're in Northern Ireland, it can be slightly different than if you're across the water in the mainland UK, because there are slightly different rules due to something called the Northern Ireland Protocol. Again, with services, again, prior to Brexit, we were using codes like a T22. You might find that T22 is a code that's no longer used again. Now, I'm being brief here because what I want to do is I want to show you the tax code finder, because each situation can be very different from the next one. So it's really hard for me to say in each situation you definitely need to use this tax code. And if I'm honest, if you rang technical support, they would be in a very similar situation. We need to know the ins and outs of each and every transaction before we can sort of give guidance. And again, what we do give is guidance. Unfortunately, we can't say you must use this tax code, but we can use the information you can provide us with to point you in the right direction. So what we have to help us and to help you is our tax code finder. Now, this tax code finder article is available on our help centre, and we normally recommend to keep it as a favourite. So if you can, if you've not already used it, get this one added. Now, I'm just going to pop it into the chat. So I'll just be 1 second while I just pop this into the chat panel, this link, because we're going to try something today. Haven't normally done before, haven't done it that often, and it's to actually give you a go of doing this with a scenario as well. So I'm just going to pop back onto the PowerPoint. So if you can have a look in the chat, I have provided you with a link there, which you can use and add as your favorite, save it somewhere that you're going to use every day, pop it on your background if you want. And this is going to help you if you're in the situation where you've got a transaction you haven't dealt with before and you need to know what tax code to use. And this is regardless of whether or not it's a Brexit transaction or not. So you can even use this for your UK transactions as well. Now, what this does is it asks a set of questions, and based on your answers, in most cases, it will point you towards potential tax codes. Now, there are some situations where we can't even give you a tax code to use because it's very grey, and it will just tell you that you need more information, point you back to HMRC. So what I would like to do is I would like to see if anyone wants to take part today. I appreciate it's on the run up to Christmas. I know everyone's trying to get to Friday, but it's just to get a little bit more hands-on today, and it's actually to use this tax code finder in a couple of scenarios. Just gonna pop out for 1 second because I've just hidden the slide, so bear with me while I just find that. I hid the slide so it wouldn't turn up in the handout because I didn't want to give everyone the answers today for you, just in case you want to take part there. Right, okay. I'm going to just share my screen then again. There we go, should be loading. Okay, so if you're willing to take part, what I would like you to do is use that tax code finder and answer the questions on the tax code finder to see if you can work out a tax code for this particular situation. Okay, I've tried to give you as much information as possible to get through the tax code finder. So you're using version 28.1. You're based in mainland UK, so that's a little hint there. I haven't given you the answer, but there is a hint. And you're purchasing standard rated goods worth £1,000 from France. You wish to use postponed accounting. Which tax code should you use? So have a go on the tax code finder, see if you can work out what tax code to use in this particular situation. Now this is probably where I need some background music or some Christmas tunes to go on in the background. So there might be a silence for a moment while I see if anyone's answering. And if you do get an answer, just pop it into the chat box or the questions panel. Be brave, don't worry, we're not going to name and shame if you get it wrong. It's all about trying to work the tax code finder. So I'll just give it a moment or two. Let's get the tax code finder ready. Fabulous, we've got some answers coming through. Thank you for joining in. It was a little bit of a gamble there as to whether or not anyone would be joining in. I'll just give it a few more seconds and then I'm going to just go through the answer there. Fab, they're all coming through there now. There is a slight delay on here as well, so. Okay, so a few different ones, that's fine. So I'm just going to go through this then, this example here. So I'll just go through it so you can see. So if you did get a slightly different answer to myself, you might hopefully be able to see where it is you've maybe gone slightly wrong or slightly astray there. So we did say first of all that it was a purchase and it was of goods. So now you can see it's opening up a whole heap of questions there. And immediately it starts to grey out ones that become irrelevant. Okay, so it's goods that I was buying and it was from France. And immediately that removes the domestic reverse charge questions, which is great. Now, then this is the one where I hinted, but I didn't give you it all out. Is the transaction covered by the Northern Ireland Protocol? So we're not in Northern Ireland, we're in the mainland UK. So the answer to this one would be no. Does the import exceed the import reverse charge threshold? In this case, yes, it does. And are you using postponed accounting? And we said yes to that one as well. And we were using 28.1, so I'll just say yes to that one too. So if I click view steps, it will work out what is my best option in this scenario. Let's wait for that to load. And the majority of you did get this right. It was just one or two maybe went a little bit astray, but that's completely fine. It's all very new. We've got a T18, which is what the answer I was looking for, because remember it was standard rated goods that we were looking for. So well done to everyone for getting involved first of all, and secondly for getting it right. There was quite a few of you there, so thank you very much. Okay, I've got one more. Don't worry, we're not going to do any more. I think I've just given the answer away as well. I didn't pause the screen there. So if you were quick, you might have seen that one. Let's just get that one back on. So that one was a T18. So I'm just going to share my screen again there now without the answer on. So in this case, again, use your tax code finder if you go back to the start there. And this time we're based in mainland UK and selling zero rated services to Spain worth 15,000. We're not using postponed accounting. Which tax code should I use? So again, I'll give you another moment there. And while I give you a moment, there is a question there of what is the reverse charge threshold. So the reverse charge threshold we were talking about earlier is around that £135 consignment scheme. So if it was below £135, I can use reverse charge in a slightly different way to postpone VAT. So that's why it was asking that question there. So basically it was asking, is it less than £135 and does it meet that criteria? Okay, so if you can give that one a go, don't worry, this is the last one. I won't do this all afternoon. Quick question there about what is postponed accounting. So I've given a really brief overview around what postponed accounting is, and what it's allowing us to do is, rather than pay VAT up front and then reclaim it later, which when you're talking about customs could be a few months down the line, is it's allowing you to pay and reclaim on the same VAT return. So it's something that's specifically been brought in for Brexit. Now, Tina has given you a link that gives you a little bit more information on postponed accounting, but there is a whole heap of information on the HMRC website around postponed accounting as well. So I would definitely recommend checking out online there as well. So there is lots more to it. We've tried to sort of keep it as simple and basic for our purposes today. So the answers are coming through there, so this is great. Again, thank you for joining in, taking part, trying to find different ways of getting people involved and getting people into the webinars and participating. So let us know what you think as well. So the answers are starting to come through this. I'll not keep you on too long. I appreciate everyone's probably busy trying to tie up loose ends before Christmas. We don't want to keep you hanging on talking about Brexit. Just going to pause the screen again there so don't accidentally reveal. And pop back onto my tax code finder. Okay. So for this one, bear with me. Just going to have to bring the scenario across so I can remember it. Right, okay, so for this particular one, we're based in the mainland UK and we are selling zero rated services to Spain. So it is in fact a sale and it is of services to the rest of the world or abroad. So nice and easy there. If we quickly view steps, it's grayed everything else out, so there's nothing else. And on this one, I'll be honest, I was a little bit naughty on there. I did put on you're not using postponed accounting. It was a bit of a curveball because you won't use postponed accounting for your sales. So I was trying to confuse a little bit there. So I do apologise. But no, that's there's a couple of people saying that I'm not using postponed accounting. So the key there was that we were selling to Spain, so rather than purchasing from Spain. So yes, I tried to make that one a little bit trickier there, just to show you the difference between selling and purchases there. So it would be, in fact, this time it would be T0 because it was a zero rated service that we were selling to Spain. So well done. I think a few of you's got that. Apologies if I did throw in a little bit of a curveball there, but yeah, it's the terminology being used when we're talking about. So just make sure you know if it's a sale or a purchase, and that should get you on the right foot there. Okay, so let's just do a quick summary before we finish up today. So very briefly, just wanted to very briefly mention about import duty and VAT. Okay, so if you are having to reclaim VAT and you're going down the route of using C79s, etc. for import duty and VAT, then again, this is a really tricky one. It could probably be a webinar in its own right to give you all of the information. So this article that I've got here for you does detail the different scenarios depending on what paperwork you have or have not received and whether or not you're using postponed accounting as well. So this is a really good article to have a look at, and we do get a lot of questions on this, and unfortunately again it's a little bit like which tax code should I use. There's so many different scenarios in terms of what documentation you have, etc. So please do check out this one if you've got any questions around import duty and VAT. Okay, so quickly to summarise. So there are 6 new tax codes introduced in the UK post-Brexit, and it might be that only 1 or 2 apply to you, or none at all, depending on how you deal with the rest of the world. They're only available in 27.1, and there is one additional one, the T14, which was introduced in 27.2. Remember, if you're using sales to the rest of the world, you won't need to use the new Brexit tax codes, but you might need to use different tax codes to what you did previously. Postponed accounting was that terminology that we mentioned at the beginning, and it's there to assist with cash flow. And again, we try to take all the hard work out of it by creating a tax code that does everything for you. All you need to know is whether or not you need to post it with postponed accounting. And I think there's someone beating themselves up for not reading the question properly. Don't worry. Sorry, I do apologise. I feel awful now for sending out curveballs there. So please don't beat yourself up over that. And finally, the tax code finder article. This will help you work out what tax code you need to use. But in some circumstances, it might also highlight that you need other bits of documentation in order to make that informed decision as well. So it's really useful. Brexit or non-Brexit, it doesn't matter. Even with your tax codes in the UK, it's a really handy tool that we're always recommending that you use there as well. Okay, so quickly just to talk about New Year. I know Christmas hasn't been and gone yet. You've probably not had your holidays, but there is webinars coming up straight away in the new year. We're going to get on with it straight away. We're going to be looking at global changes in the software. This is a new webinar. We haven't done this one before. But new year, it might be the time where you need to revisit things. So things like customer credit limits. It might be unfortunate that you need to pop in some price increases. And global changes will help you do that to multiple records at the same time. You don't need to do all of them, so you can pick and choose. And global changes webinar on the 6th of January is the one to come to, and we'll show you all about global changes. In addition, if you are in the UK, and you are registered for Making Tax Digital, which you most probably are if you're on this webinar today, there is some new penalties coming in for Making Tax Digital in 2023. And we're going to do something that's not really product specific, more around the legislation itself. We're going to have a member of our compliance team joining us, and we're just going to highlight where we should be now in the Making Tax Digital journey, and also what's next in terms of those penalties. So do join us on that one. And that's on Thursday, the 12th of January at 10 o'clock. And both of those are available on our Help Centre article now. So if you want to get signed up, get yourself signed up now, and then we'll see you in the new year. This week, Michael is going to be doing bad debt tomorrow, and then we also have year end on Friday. So we're still going this week. So if you do want to join us on those as well, they're also available on our website, and you can get yourself registered for those. Okay, just before we go, any final questions, please pop them over. We'll get them answered for you. And I'll just briefly talk about Sage membership. So you might not be aware, but you do have Sage membership if you're a customer with us. And it gives you free access to Sage University, which is our online learning platform. It means you can log on, you can do certifications, you can do courses online. I'm sure there are some around Making Tax Digital as well on there. So if you do want a little bit more information, then they're a good place to start. Sage City is our online platform which has the community on there. So we've got options for you to submit ideas, software ideas. And also we host some of our questions on there as well from the webinars. So check out Sage City as well, and they also link into our webinars too. Quick question there about where's the tax code find. It's in the chat, but if not, Michael's going to send you a direct link, so he'll just grab that for you. And then finally, the Sage Masterclasses. So we're on season 2 now. Season 1 was all around finding and keeping great people, so keeping your staff happy, how to do a world-class onboarding experience, how to nurture talent within your workplace. And season 2 was all around productivity. And these are basically guest speakers who've created videos for us, and there's some really interesting videos on there from lots of people from different walks of life as well. So if you do want to have a look at our masterclasses, then sage.com/UK/masterclass. Or we have done a webinar on all of the benefits of a Sage membership as well. So the recordings on our recordings page if you're interested in that. And all of this is free if you're a Sage member, which is great to have. It's all of the help and support that you need. It's not all around your product and your software. It's all of the other things that help your business going. Okay, time for me to stop talking. Thank you very much, everyone, for joining us. think everyone's questions are answered. So thank you very much to Tina and Michael. Not an easy topic for answering questions on, but we do try our best. Thank you everyone for joining us today. We hope to see you tomorrow if you want to join us for bad debt. If not, Thursday we'll see you for a year-end session. So in the meantime, take care. If you are having a break over Christmas, then do enjoy that. Happy holidays, and we'll see you in the new year. Thanks everyone. Goodbye.